Hi everyone, my name is Ryan Jones and I want to welcome you to my very first video blog. This is March 21st, 2018. This will be the first video blog of many that will be coming down the road, and I will cover virtually every topic that you can imagine. Um, Obviously, I'm going to spend a lot of my time on not only what's necessary in the trading industry, but also on what I focus on the most in my own trading, which is option spreads, and specifically weekly option spreads. So my very first video blog is going to be entitled The Anatomy of a Risk-Free Projection Trade. The Anatomy of a Risk-Free Projection Trade. And if you've never heard of what a risk-free projection trade is, I've got a lot of information about that on a couple of the sites. So it's something that you'll also obviously learn about through these blogs as well. Nonetheless, this is a projection graph of an actual trade based on actual fills that I have on right now. And as you can see, it is a risk-free projection trade. And I'll talk about that here in a minute. Nonetheless, this video blog is being sponsored by Trade Partner. And if you've not heard about Trade Partner, you will in the very near future. It is absolutely fabulous what Trade Partner can do for you. So this video blog is sponsored by Trade Partner. Now, as we get into this blog, this is a risk-free projection graph. And the one thing that I want to point out before I get into the details of this is that there are a lot of opinions out there about how to trade options. I mean, everybody and their dog has an opinion about how to trade options, but that's obviously because there is an infinite number of ways to trade options. But what you have to do is you have to settle on a couple of basic things and create your option trading around some solid foundations, which is what the risk-free projection approach does as well. So there's a lot of opinions out there, but there's also a lot of misinformation out there within those opinions, and you have to be very, very careful. A lot of opinions by traders who have never experienced any kind of success whatsoever, especially on the blogs and the chat sites. Man, you have to be really careful about what you listen to and what you see on those because there's a lot of misinformation, and the misinformation can lead to costing you a lot of money. And I would remind you that 85 to 95% of traders lose money, and I will be talking about this in future blogs. And you're going to find it absolutely fascinating because it's not what you think. The main culprit is not because of the strategy, and I will show you details of why that is the case. All right, but for now, I'm going to stick to a couple of specific trades that I have in this particular blog, in this introduction blog, if you will. And these trades are based on my risk-free projection approach. And there's a lot of different ways to create a risk-free projection trade, but the one thing you need to understand is that risk-free projection does not mean no risk. Risk-free projection does not mean no risk. And I will get into a little bit more detail on that as well, but I wanted to make sure that you absolutely understand that. And again, this is an actual risk-free projection trade that I have on right now, actual fills, not hypothetical. So this is not theory, as some people claim that my approaches are theory, and they're not. It's not theory, as evidenced by the actual trades. And by the way, I will never talk about hypothetical trades on this blog. All the trades that I reference and we'll talk about are going to be actual trades, actual fills, actual trades. Now, to begin with on this particular trade, it's important for you to understand that a risk-free projection trade does not necessarily, and in fact often does not start off as a risk-free projection trade. It can, and I will show you one that I have on right now as well that is a risk-free projection trade from the beginning. But nonetheless, most risk-free projection trades simply start off where the mathematical probabilities are squarely in your favor. All right, so it doesn't start off this way. You build it to become this way. And this is the trade that I started off with in this particular example. And this particular trade, today is March 21st, and this trade was placed on March 19th when SPY was trading right around 271. And this projection was based on the close of March 21st, which again is today. So when I place this particular trade on, this was the projection. And if by today, so this was placed on Monday, today is Wednesday, if by today SPY had moved up to 276, then this trade would have lost if I would have not been able to do anything else. All right, it didn't do that. It closed just under 271. But one of the reasons that I'm showing you this trade is because it's not one of the better starting trades. But it is one where the mathematical probabilities were squarely in my favor when I place the trade on. And so in this particular example, my risk is about $200 worst case scenario, and that would occur at 276. Most of the time I place on trades within the risk-free projection strategy where the risk is significantly less than $200. Not always, but significantly less most of the time. And there are many ways to create these. So it just kind of depends on what you are focused on. Nonetheless, these types of trades are available often. And for example, I placed on another trade exactly like the one I placed on Monday that expires on Friday. So I placed one on Monday that expired today, and then I placed on another one that expires on Friday, exactly the same. And this is the risk-free or not a risk-free projection, but a projection graph of that trade if I don't do anything else. And you can see the profit potential is above 200, and on this one, the risk is actually about 150. The risk potential is about 150 at 275. And the market, of course, is trading below 271. So on this one, which is the one I started on May 19th, has a max peak gain of about $200, a little more than $200. It has a max peak loss of about $200, and that occurs again at 276. And the probability of success of making something on this trade is a little bit better than 65%. And then the probability that SPY would close below 276 is 84%. So there is less than a 15% chance, and actually much less than a 15% chance that I'll actually suffer the maximum loss on this trade at 276 because it would have to close right at 276. And so even if it moves up, it should, there's a high probability that it could move up more than 276 or not quite make it to 276. So very high probability that I'm not going to suffer the max loss on this trade. And that's kind of what I key off on a lot of times. It's not necessarily what the max trade loss is, but what is the probability that I'm going to experience the max loss? And usually it's pretty low based on how I approach this. All right. Now, one of the things that people get hung up on is that when I talk about probabilities, mathematical probabilities, for whatever reason, they translate the term mathematical probabilities into mathematical certainties. And that is not what we're dealing with. This is trading. There are certainties within limits, but probabilities are not certainties. And so while the mathematical probabilities of this trade are in my favor, if I place this trade on 5 times and 5 times the market moves up into that area of where you see the loss, then I will lose 5 times in a row on this type of trade if I'm unable to do anything else on it. And when people see that, and then they go off and they start saying, oh, well, it doesn't work. It's probabilities. And sometimes probabilities, guess what? Sometimes probabilities don't work. But I'm going to tell you right now that in option trading, that's all you have. You either put the mathematical probabilities in your favor or you don't. You can never ever start a trade with a mathematical certainty that you're going to make money on that trade, ever. It just does not happen. Please, please, please understand what we're dealing with here. This is trading, and so I show you some really great stuff, but that doesn't mean that anything is guaranteed to work. Any particular trade is guaranteed to work. So this particular example, if the market moves up into this area, if I place this type of trade on all the time, and the market moves up into that area many times in a row, then I'm going to lose that many times in a row, and you have to prepare for that. And in fact, this happened to me at one point last year when SPY moved and closed at all-time highs 7 expiration days in a row. 7 expiration days in a row. And I was only able to enhance 2 of those particular trades, which means that there were 5 times in a row where the market moved up into that dead zone. I call it the dead zone, and stayed there, and I wasn't able to do anything, and I lost money 5 times in a row. And you know, traders that happen to be watching at that point, they'll draw conclusions as to the validity of the approach on 5 trades. Some of them I've seen them take one trade and say, "Oh, your approach doesn't work." How silly is that? It's pretty silly. So the key with regard to probabilities in option trading, if you're going to trade options, you have to commit to them long enough for the probabilities to work out. So you have to put the probabilities in your favor, which you can do, but then you have to commit long enough for those probabilities to work out. And most traders don't. They want to make $1 million tomorrow, and they want to win on every trade. Um, it, it's some bizarre stuff out there that you'll see with regard to expectations. So I see this over and over and over and over and over again. And for whatever reason, sometimes when traders have money on the line, all logic and all reason is completely abandoned. And so I'm trying here to, with this blog, help traders focus on what they need to focus on and not be so micro focused on the next trade or the last trade or whatever. You have to focus on the probabilities and make the proper commitment. So on this particular trade, fortunately, SPY did not move up to 276, which it had a very small probability of doing that anyway. But it didn't do that. It closed right under 271, and I ended up with this trade at an open position profit of just under $200 as of right before the close of today's market action. So very, very close to what the projection was providing. And this is something that as long as you do it long enough, you will experience these kinds of opportunities. Now, I did not completely exit this trade. Instead, I made an adjustment. I made an adjustment of this trade, and this adjustment created the risk-free projection in this trade. And there are many ways to create risk-free projection. So on this one, it was an adjustment, and the adjustment also increased the profit potential. So it decreased the risk, increased the profit potential, and dramatically increased the probability of success. And this trade, as it is, the projection graph is based on a close as of March 23rd, which is 2 days from now, Friday, March 23rd, 2 days from now. Okay, so risk-free projection now, it's projected to not make money right at 275, but anything before or after 275, it is projected to make money, and I don't have to do anything else to this trade. I can and probably will, but that's the projection if I don't do anything else on this trade. Now, this risk-free projection, again, does not mean that there is no risk. If SPY closes between 274.5 and 275.5, and I don't do anything else with this trade, and volatility comes out of the options more than what the projections are showing, I could still suffer a small loss on this trade. All right, and it's generally in the small little area that you see shaded in yellow. That's about where I could suffer a small loss if SPY moves up there and SPY has the volatility come out of the options. As I mentioned earlier, you can sometimes start off with a risk-free projection trade. And this is an actual trade that I have on right now. And again, this also closes on Friday. And this is without any adjustments, right? So this is a risk-free trade risk-free projection, risk-free projection trade that I placed on today. And it ends on Friday. And you can see that it's projected to make money or break even no matter where SPY moves or closes by Friday. And these are actually more dangerous than some of the other trades, like, for example, the one that I started with today where the risk was about 200 bucks. These are more dangerous because what traders do is they see this, and without being properly prepared, without preparing themselves, without educating themselves, they just look at this and they're like, oh man, this looks awesome. Let's go big, right? They get greedy and they don't account for volatility drops, which can and do happen. And so they trade a ridiculous trade size. And this is a 30 lot. And sometimes they'll do this with a $5,000 account. So this is a 30 lot. And the profit projection is above 3 grand at its max. And again, there's no risk, right? So it doesn't matter how big you scale. It's never going to show a potential risk based on the current projections. And if you think that this is just my platform, this is my platform projection, PDS Trader, it's not. This is the IB platform of the same exact trade. And look at the profit probability. It says 100%. And you'll notice that that dead zone area, which is right in here, there we go. So this dead zone area, which is right there in the yellow, it's actually well above zero is what they're showing. Whereas I show about a break even, they're showing well above zero profit potential and no risk to the downside whatsoever. All right, so now again, you have to be careful with these because what happens sometimes is that volatility drops out. And on these types of trades that I place with regard to the risk-free projection, if that happens, this is what you might be looking at on a 30 lot, right? So you go big and then the volatility drops out and the market moves up into what I call the dead zone. You're looking at, instead of no risk, about a $2,000 loss. And traders get themselves into all sorts of trouble because they don't properly prepare for the risk involved. Now, on a one lot, the risk is only about 70 bucks, but still, if you're expecting no risk and then you end up losing $70 in a perfect storm type scenario set of circumstances, it's going to be a little disappointing, a little discouraging as well. You're probably going to go off and not do anything like this again. But these things don't always happen, and there are ways to prepare and ways to hedge against them and whatnot. And I'll show that here in a little bit. But nonetheless, if the projections are wrong, you have to be prepared, and you have to know why they might be wrong, and you have to be prepared. Now, personally, I took this trade because I have another trade that complements it. And as you can see, this is actually the combination of two trades. So there's one trade, which is the RFP, my risk-free projection trade, and then there's another trade that I had on already that allowed me to go big, or bigger, I should say, with my risk-free projection trade because of what it would potentially do if SPY moved up into that dead zone, which was the 275 area. And you can see there's a profit spike at the 275 area, and that's with volatility dropping. So this is accounting for volatility dropping, right? So I will talk more about this trade in next week's blog when it is done, and I'll talk about a couple of other things in next week's blog that you won't want to miss. But I will completely reveal what my complementary trade actually is. You might be surprised at what I do on some of these things. It's really simple. But like I said, I already had that trade in place, and so it allowed me to be a little bit more aggressive with my RFP trade, and that is the projection that it produced, and that's again based on one lot and with volatility coming out. Okay. So I hope you enjoyed this blog. If you're not a member of my Risk Free Projection online course, make sure you watch for the email in late April when I make the course available again. And if you are already a member, then you saw the exact details of the trades that I covered in this video blog. I don't reveal the exact details to other people because they will go off and try to make these trades without going through the education, and they will get burned. There are things you have to know and you have to understand in order to properly trade this approach and trade any option strategy for that matter. So for that reason, I don't reveal that. All projection graphs provided in this blog are provided by PDS Trader, and you can visit paydaystocks.com for more information on PDS Trader.